In this video, I want to speak about gold, and I'll make a technical analysis on this pair. So everything I'm going to discuss in this video are all from technical standpoint. Now, when we look at this market from the monthly time frame, I'll make a top-down analysis on this pair. So when we take a look at this market from the monthly time frame, we can clearly see that gold has been trending strongly bullish since 2023. So we can see after we had a major breakout around the $2,000 psychological level here, we can see that price has made the first impulse move starting from here October 2023. We saw how the price made the first impulse move followed by a slight correction. It made the second impulse move followed by consolidation. So these corrections were not significant in this monthly time frame, but we see a couple of rejections, and after that we had this another impulse move to the upside. Now, as market is making impulse correction, if this is to be the last impulse that we had in this market, technically the next thing that's supposed to follow up is what? Is a correction. Okay, so from the monthly time frame, we see that price is trending bullish, but at the moment it is already overextended. It is already overbought. That's what I mean to say. So we had a new all-time high on gold, which gold traded at $3,600 level. Now, the next question is, are we going to expect correction at the moment? Technically, yes. Technically, we are supposed to have a correction, okay, because from here we see that the last impulse that the market made, which was able to make the new all-time high, started around the $3,272 level, which is around this level. That's where the last impulse originated from, since we now have a new all-time high. So if price is to make a correction, at least it will be coming back to that same price zone. This is the base of that price level where I actually anticipate some form of correction. So from the technical standpoint, I am looking forward to seeing profit taking activity occur on gold. All right, so let's scale down to lower time frame, the weekly. So here in the weekly time frame, we can see before the new all-time high was made, we had a couple of rejections around this level. So price rejected that same zone for a couple of times before we had this new high. So in a situation like this, what we expect the market to do is to correct the impulse-like pattern that is already made. So if we pick a Fibonacci tool and measure from the lowest point, so in this case, the last higher low which the market formed before the new all-time high was made is around the $3,121 level. So if we put our Fibonacci tool from the lowest point, which is that zone, to the highest point, which is the new all-time high, we can clearly see that around the 50% Fibo retracement, or let's say from 23.6% Fibo retracement level to 50% Fibo retracement level, all those lines or all those areas lines gap with previous resistance level. Here was the previous resistance in which this move to the downside was created. Price tested that same zone and declined, tested here and rejected before we now had this breakout. So in a situation like this, I also expect price to make at least a correction, a 23% correction, before any bullish impulse can continue in this market. So the weekly time frame, we are also seeing possible correction in this market. Okay, so let's now go to trading time frame, which is the daily. We are also going to see the directional bias on daily before we can then make intraday trading decisions. So here from the daily time frame, we can clearly notice a couple of things, because here the price action seems clearer. First of all, we can see a W pattern formation. We see this first low, price rebounded, another low, but this low is likely a higher low because it didn't form a relative low with this previous low. So from here, price extended up. So we have a W pattern, and after W pattern is formed, what next do we usually anticipate in the market? A correction, at least to complete the neckline. Okay, so price tend to pull back to the neckline. Okay, we are familiar with this pattern. We know that anytime price forms a W pattern or inverse M pattern, as some traders call it, the next thing that we usually experience in the market is a correction, at least to the neckline, or at least 38% Fibonacci retracement of the impulse-like pattern. So here, if we measure the impulse from the lowest point here, or if we pick up Fibonacci to measure from here, from this low to the all-time high, if we do that, we can notice if we measure with Fibonacci tool like this, from this lowest point here to the all-time high, we can clearly see the 38.2% Fibonacci retracement level to be around here. That is the 38.2% Fibonacci retracement, which I've already placed a line in between that level. Okay, so at least it is very, very possible that we can see a retracement back to that level. That is the directional bias from the daily time frame. So the next thing we need to do now is to check the intraday time frame, where we can swing the market or do some type of day trading. So let me check the H4 time frame, because that is where I love to use for trading. So here in the H4 time frame, we can see that from H4 time frame, clearly prices has been pushing up in a couple of days now. For the past 3 consecutive days, price has been trading strongly bullish. But then before the market closed on Friday, we saw some couple of price reactions. First of all, this is the 38.2% Fibonacci retracement level, which we identified in the daily time frame, which from here we can clearly see that after price consolidated for a couple of hours here, it pushed up. Okay, so that level where the market pushed up become our base price. So here I can then place it well. That area is a base price of, that is like a demand surge. So after the price pushed up from that level, we saw that previously we had the all-time high at this area here. We previously had here as the all-time high before the news that came out on NFP day pushed the price higher. So if I am to trade from this H4 time frame, this was where the previous buyers were opening their position, and whenever you want to trade, you shouldn't be the exit liquidity. That means there need to be a liquidity before you can be able to trade. So those highs were the highest level where the price previously traded, which some traders were opening position around that level before the news came out on Friday, which pushed the price higher, thereby grabbing the liquidity. So right now, price has left a hanging or a hammer. We've seen a reversal candlestick and also some bearish momentum that closed the body of that reversal candlestick. So that is a sign that we are going to see some bearish price action development away from the all-time high of $3,600 level. So we are already selling XAUUSD. Just before the market closed, we were able to open some positions. So from the 1 hour time frame here, which is the last time frame I want to look into, we can clearly see it that before the market closed, it closed on a strong impulse move. It closed with a strong bearish candle, which is a confirmation to the reversal candlestick that we've already seen in daily time frame. So we are already shorting just before the market closed. So upon the close of the impulse candle, that's when we opened our sell, and our stop loss is at the all-time high. All right, that's our stop loss. So we are going to hold this trade for a couple of days. This coming week we have other economic report, some macroeconomic report which we anticipate, like the CPI and so rest of them. So we are going to be selling gold, and our first profit target will be at this 38.2% Fibo retracement level. Just before that area, we can see this liquidity here. We can see the buyers around that level. So that zone is to be our take profit. So this is the trade entry from the 1 hour perspective. So we are already shorting gold, and that's going to be the first sale entry we are making after price broke the $3,500 level, which was the previous all-time high that gold made around April this year. Okay, so this is the first sale or the first swing trade that we are taking. So that's the analysis on gold.